Russia's got oil. China's got gold. What's India have? Pistachio nuts. I mean, that's actually Turkey, right? So India's got to get on board economically. They have to, and I think silver's the perfect metal.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today we have part 2 of this month's interview with Vince, the Professor Lanci, where he digs into the central bank gold buying, some of the revaluation comments from one of the Dutch central bankers, and a whole lot more. So I think you have a lot to look forward to in this one. Well, real quick before we start, would like to mention Silverfest 3 coming up this Saturday, November 12th. It's free. It's online. You can sit there in your chair at home all day and watch silver coverage from some of the top experts in the industry: David Morgan, Bill Holter, Peter Kraut, Rob Keynes, James Anderson, Ronan Manley, Rafi Farber, and more, as well as today's guest, Vince Lanci, who will be joining us for that one. So free to sign up, and the registration link in the description field below. So go click that bad boy right now. And with that said, here is Vince, the Professor Lanci. One other topic that I think would be fun to cover with you while we have you here is something we saw last week come out, and that was a report of record central buying lifts the global gold demand. Although interesting in there, they had a report that a substantial amount of gold was also bought by central banks that did not publicly report their purchases.
Yeah.
And I know there was some discussion. Ronan Manley had another article where if you have about 300 tons of gold that isn't publicly reported, where is that coming from? How do you view that? Is that a little concerning to you, or that essentially we're taking metals focus estimate with it being unreported? What would you say on that one?
It's real simple. It's walking like a duck, and it's talking like a duck. It's a duck. Okay. So not to be flippant about it, but when you see a large purchase of gold by Eastern BRICS-biased countries, and you see India, which is, in my opinion, they have one foot in both worlds, and they're going to do very well because of that. And then you see Russia's not there. Well, Russia, I mean, maybe they can't be there. I don't know what's going on with the sanctions. And you see China's not there. Well, I'm sorry, but duh. I mean, we as reasonably intelligent people want to see both sides of the story. And I do that more than most people. But I'm full circle on this. It's simple. If somebody's buying it and you know who bought it and there's still that much left, there's only like 3 buyers out there that could do it: China, the US, and a large Asian consortium of buyers. So you should operate on the function. You should operate on the assumption, I should say. You should operate on the assumption that that is East Asia buying gold. Is China buying gold for themselves? Right. Yes. Is China buying gold for Russia? They could, but Russia makes a lot of gold. Is China buying gold is Japan buying gold? Probably. Like people, but we would know about Japan because we're the West. Japan's the West economically, and they'd be more transparent. China has so much gold that they don't tell us about. I mean, I read an article by Ronan Manley a long time. I love his long market structure stuff, and I learned about China's market structure from him in like 2017. He wrote a post describing where the gold goes in China once it goes in, and I wrote a post on that called "Gold Checks into China but doesn't check out," something cheesy like that. Actually, the post was, "When China confiscates gold, buy silver." And I'm laughing because it was like, at the time I thought I was overbaking it, but you know what? It's right. Anyway, but that's another conversation. The gold, China's got so much gold off their balance sheet that they're not talking about. Some areas of Mongolia or Manchuria, or I have no idea. But the only people who don't know about it are us. Other countries know about it, and so the buyer is a big bank that doesn't want you to know they're buying. That's it. That's it. So the incredulous part is we go, And this is where I got this lesson years ago, but it's a very important lesson. If this is happening, Vince, and that is happening, Vince, then why is the price down here? And my typical thoughtful answers would be, well, it could be an arbitrage. You don't know what's going to happen. But all those things would come back to a mentor, what a mentor said to me. And this is the Goldman Sachs mentor. So I go to him with information, and he says to me, efficient market, nobody cares, right? And then I come back to him one day and I say, why did silver rally 10% today? The vaults were drawn. I'm not exaggerating, but I'm describing what happened in '97. I'm like, why did silver rally 10% today when the vaults have been draining down for 3 months? So I call him, I go, you said the market was efficient. And then he would say to me, like in some sort of a Zen master, he'd say, well, I guess it matters now. Well, what do you mean it matters now? Why did it matter? He goes, well, it didn't matter until it mattered. So sometimes the $20, what's the efficient market theory? The $20 bill is not on the sidewalk. Sometimes the $20 bill is on the sidewalk. And if too many people believe in the efficient market theory, then like a hypnosis, then it stays there longer than it should. And my conclusion is we, even me, who respects it, grossly underestimate the power of global banks to keep a lid on price. We really grossly underestimate it. And if the price isn't up yet, it sounds very paranoid. If the price isn't up yet, that's because they're not done buying. That's it. They're going to keep buying it while it's low until there's none left. And then you're going to be like, geez, I wish I had bought some. It's going to be an overnight thing. So which applies to silver as well. So all that gold, it's not rocket science. Okay. It's being bought. It's being bought by someone. Is it being used? Are they using it to create gold fillings? Like, no, they're not doing that. They're probably buying it. Someone is buying it because it will be money in this Bretton Woods world, this post dollar world, in this multipolar monetary system world. It will be money, just like India is buying all that silver. Why is India buying all that silver? I think India's buying that silver because they could be buying for someone else too, right? But I think India's buying all that silver because when the Eastern countries start to negotiate for their little basket, okay, here's our commodity-based basket, and they want that basket to represent their economic contributions to the bloc, like the SDRs are supposed to be. Well, it's going to be like silver. Yeah. Well, who has silver? Well, silver is important. I got silver. People are going to have silver. It's like, so Russia's got oil. China's got gold. Let's just say that Russia doesn't have any gold, but they do. Russia's got oil. China's got gold. What's India have? Pistachio nuts? That's actually Turkey, right? So India's got to get on board economically. They have to, and I think silver's the perfect metal for that. And they will keep a lid on gold prices forever, not on silver. They can't. They can until they're done buying gold. When they're done buying gold, silver goes to the moon. But that's a soundbite or a bumper, but that's how I feel. So
yeah, just to be clear, because I think that's something that comes up a lot in the gold market. It's something I've been thinking about for the past decade, where you see China often not happy with the arrangement with the US, where they're sending products and getting treasuries and dollars in return. Right. And have wondered, along with many others, are they buying gold, or why not just end this and the low gold price that we see? Yet, like you pointed out, well, if you can accumulate more gold at the low price, you keep doing that until you can't. Is that, you talked about it a little bit, but is that really how you see this playing out, where they keep buying gold and then there's some sort of break point or shift at some point?
Yeah, I don't know what the event will be. And we talked about it a little before, whether it be an event like happened in the Gilts or the Bank of Japan. I don't know what the event would be. But I'm increasingly feeling that they, whoever they are, know what they're doing. I'm not saying that they're perfect or good at it, but they're certainly good at handling their own interests, right? Okay. they are going to do this carefully, and the event that comes out will be after the fact. Like for example, in 71, they went off the gold standard because we had dropped how much gold we had for the last 2 years. So it's always like the tombstone or memorial, is after the death. The funeral is after the death. So the announcement or the eulogy is after the death. So, but to answer your question very specifically, there could be an event. I don't know. I don't think there will be an event. I think any event that happens will get pushed back, kind of like the nickel thing. Push it back. Do whatever you have to do to buy time. We don't care if gold goes to 10,000. We don't care if silver goes to 500. We care if it gets there tomorrow. So I think any event that's out of their control, they will push back. If they don't successfully push it back, then I think you've got bigger problems in the price of gold and silver. If they do successfully push it back, I've noticed that whenever the government pushes something back, they generally let it start to go that way slowly over time, kind of like bonds after the pandemic. So I think what I'm trying to say is I don't think I'm not married to it. I'm always on the lookout for it. But I don't think there will be an event that surprises them that they do not push back on. I do, however, think there will be a planned event, whether they get to it or not. And that planned event will be using gold as an example. And so again, silver benefits. But look, if they do have all this gold in Fort Knox, and they need to revalue it to at least partially back the dollar, just staying with the US here. How do you do that? You don't announce it. You don't announce it. You destroy your currency, okay? You phase it in. You phase it in, right? So you trade it on the floor, right? Okay, I traded on the floor. When a weird analogy, but it makes sense. When they introduced electronic trading, they didn't shut the floor down. They left the floor open. And then they gave people on the floor tablets. Here, you can trade the floor and arbitrage it electronically. So the old business model, the dollar, was allowed to exist, but they seeded the old business model with the new business model. And eventually the floor, which is we call it the liquidity pool, migrated electronically. Guys who knew how to trade off the floor did, guys who didn't, figured out something. So take that analogy, which is, it's how businesses are run. When you're creating a replacement for an existing product, you do not announce a replacement. You do not say, Tide is now called Tider. You don't do that, right? You say new improved Tide. It's the same thing. You don't change the name. So taking it to money, you don't announce that you're changing greenbacks, like some Confederate money, to goldbacks. You don't do that. You destroy your transition. It's a nightmare. So I said, looking at the floor analogy, well, how do you introduce it, right? How do you introduce it? Well, you introduce it over time. How do you introduce gold over time? You do it with bonds. So I think they will introduce gold into the market, use it to back their currency by creating a side-by-side product, floor, Globex, a side-by-side product, and let market forces do the rest. Of course, they're going to push one, but they'll let market forces do the rest. And the way to do that is to create an arbitrageable product that's based on bonds, that has gold involved in it, which allows you to sell your gold. But that's what the government wants to do. They either want to sell gold or let it float at its higher price without disrupting the dollar. And this is what they're going to do, in my opinion. If I had to do it, I would say, all right, next year we're going to have a new bond product. It's a 30-year bond. And it's kind of like a zero, I don't know what you call it, but it's kind of like a zero coupon bond. We'll pay you your principal and interest in gold on the back end. I'm simplifying it, but this is how you do it, right? So what do? You create a paper product that monetizes your gold now, gets the demand for gold in the market. You don't undermine the dollar because you're using dollars to buy the gold. And so what's happening is the exchange, there's an arbitrage in the exchange rate. You know, you're going to have violent moves, but it won't be crazy. So little by little, let's assume it's not going to be little by little, but let's assume that's little by little. It's like, okay, you and I are investment brokers, right? And we say we're not, but let's say we are. We're like, all right, Mr. Smith, we think you should put some money in gold. Don't buy gold. Buy the gold bond. Right. And well, what's the gold bond? It doesn't do anything for you, but we'll be able to see the price now. We'll be able to see the price, and the price of the gold bond will reflect gold demand. It'll be like GLD, but it's not GLD. It's a government guarantee of gold being paid to you on the back end. Probably stored by the government, probably CUSIPed by the government, but they're going to attract domestic money that way. So I think the West does that at some point. They have that. It's there. They're ready to do that if they have to. So if an event gets out of control, they're going to press a button. If an event doesn't get, they're going to push back on every other event, like they did with silver in 2021. They're going to push back. They're going to do what they do because that's all they know how to do. And when it breaks, there's going to be a gold bond. It'll be like an advertising home run for that powder product, whatever it's called. But that's the answer. The answer is if you have gold and you need to monetize it and you don't want to do it and you don't want to disrupt the current status quo, you introduce the new product off the floor, you let the floor operate, and you slowly incentivize people, because people are all creatures of habit, to transition back and forth. And so that's your arbitrage. I was one of those. I was like, oh, I do the floor. And I was like, eventually, I was like, oh, the floor's gone. I don't care. Now I'm doing it on the screen. So that's what's going to happen. Who are the players? Well, the players are going to be the people they trust. JP Morgan's going to be able to arbitrage it. That's what's going to happen. And that's when silver explodes for reasons that don't make sense mathematically, but do make sense. Sorry, that's a little motorcycle thing going on there. That do make sense fundamentally. That's it. There's not going to be an event instigated by the U.S. They announced the gold going off the gold standard after it was already done. That's it.
Yeah, and along those lines, something that you and I talked about a little bit last week, we did have this story with an interesting comment from a Dutch central banker that we'll play here and then get your comment on. But this was from Jan Nieuwenhuis. I actually had the pleasure of meeting back in the Netherlands about 8 or 9 years ago. And astonishing response by a Dutch central banker when his solvency is questioned. So let's play that one here.
Maar nog één slotvraag hierover. Dus wat u eigenlijk zegt is, hoe hoger die rente wordt van de Europese Centrale Bank, daar zit u zelf bij, hoe duurder het voor ons wordt.
Ja, dat klopt.
En hoe meer geld er uitgaat.
Ja,
en hoe groter. Heel even mijn verhaal afmaken, dat snapt ook iedereen. En hoe groter de kans is dat de Nederlandse belastingbetaler moet bijbetalen om de balans van de Nederlandse bank, waarvan ik altijd dacht, die is solide, daar kan niks mee misgaan, om daarbij te passen. Dat is een nieuw verhaal.
De balans van de Nederlandse bank is solide. We hebben namelijk ook nog een goudvoorraad. We hebben ook nog een herwaarderingsreserve op het goud van meer dan 20 miljard... die we niet mee mogen tellen voor het eigen vermogen.
So there he says the gold revaluation account is more than 20 billion euros. We may not count it as equity, but it is there.
Maar die wilt u niet verkopen?
Natuurlijk wel. Nee, dat gaan we zeker niet doen.
Nee.
So he's definitely not going to sell gold and mentions their gold revaluation account, which, to be clear for folks watching at home, is not saying that there's going to be a gold revaluation, but certainly an interesting comment, and curious what you thought about that one.
Oh, yeah. Well, first of all, Jan knows his stuff, especially when it comes to European market structure. And his word he used here, astonishing, I think people might miss what he means by astonishing. But before I get into that, I'm not sure if everyone's familiar with the gold revaluation concept, but it kind of works like this. If we were to mark the price of gold to the market, then that would alleviate our debt, or a big portion of our debt. But also simultaneously would signal that gold is worth more than it is. And so that would be like, creating a problem. In Europe, I don't know about all of Europe, but I know that part of Europe lets the price of gold fluctuate with the market somewhere in Europe, right? And then most of Europe well, why don't I just stick with the Dutch right here, right? The Dutch have a, they have what we carried on our books at, we carried on whatever the number is, $100, I'll make it up. And then they have another account called what's it called? The gold revaluation account, right? And that account, they don't count it as capital they can risk, but they know how much they have in their savings account if they need it, right? So what he was saying, and we're not even at the astonishing part yet, that Jan like saw correctly. What he was saying is that if we have to, we can take the gold valuation account and as an accounting change, change our debt to that, and you'll have more money backing, more hard money back, more money backing things. But we're not doing that. And then the second thing he said was when the guy asked, "Are you going to sell it?" And he goes, "No, we're not going to sell it." Meaning you're not going to revalue it and sell it. You're just going to let it float up. So it's an accounting trick, right? It's you and me. We have an emergency fund. We don't count it as part of our net worth. That's our Christmas or Hanukkah shopping money, whatever you want to call it. We don't count it. It's money saved for college. It's not part of our net worth. But when you start going into that emergency fund, which is what he's talking about, that's because you're running out of options. The thing that was important to me, I mean, that's all important. It's all important, was that Jan saw that, I hope I'm saying his name right, saw that it was astonishing because the interviewer did not instigate the question. He volunteered it. It's like you and me are talking about tennis, and I just go, "I love balloons." I mean, he brought it up, and frequently when you're looking at central bankers and their public persona, the more polished ones are at the bigger central banks, and they're scripted and they're told what to do and what not to say and what to say. Well, this guy, Dutch central bank, not as big, not taken as seriously. He has a little more latitude, and maybe he had a little too much caffeine that day, and he said it first. Remember that central banker years ago who said something like, "Central bankers are magicians. We do things with magic." I mean, it was like a zero hedge thing, but that's it. So what's astonishing is that he said it without being provoked to say it, which means, if I can imply what I can guess what Jan was implying, is it's top of mind for him. He's thinking about it. They're moving on something, not tomorrow, but they're getting their problems. They're okay. How much money do we have to give to? Here's like, I'm in the UK. How much money do we have to give on our citizens to get through the winter? Oh shit, we can't do that without debasing the money. Well, we got all this gold. What if we mark it to market? What if we bring it over on the accounting ledger? Yeah, but that would really signal that we're desperate. Well, what if we do a little bit? Like, you could just see, like, they're doing the whole accounting thing. It's like the rob Peter to pay Paul thing. It's sell the SPR to keep oil prices down. It's take the money out of the gold and use it to justify something that you think won't last forever. Dude, it's lasting forever. It's going to last for 10 years, at least 5 years. So I think that was astonishingly revealing of the mindset of central bankers and what's their priority right now, what they're not talking about too.
Well, I mean, you always have to wonder what is the other ultimate outcome where you see the debt continue to skyrocket, and now we're seeing problems with that. We talked a little bit offline about the gilt crisis, and there's an article that came out today. I mean, we have seen the yields come back in quite significantly, down to 3.63%, yet gilt market crisis was just the first tremor of the brewing financial earthquake, where the debt is still out there, and especially with the rates going up, it seems like we probably have not seen the end of things like that. So you would imagine that there's been some thought into how this ultimately plays out, which is certainly one of the things that attracted me to the gold and silver markets. So
yeah, my comment on that is just to echo what I said about the governments don't care where it goes, they just care how fast it goes. So in this situation, the gilt market was saying no to your policies, fiscal tightness, and all the reasons that's inflationary. And so the bond vigilantes apparently are European based right now, and the market rebelled and they squashed it. They're going to let rates go higher, just on their schedule. So nothing has changed. Just looking at empirically, nothing has changed. Their influence over the market has gotten stronger. So, if these people are carpenters with hammers, they're going to hammer everything until the hammer doesn't work, and then they'll learn how to use a saw. So, I mean, for example, COVID, the bond market cratered. The bond market is lower than where it was during the COVID crisis. It's how we got there that says it's okay. So the bet is rates are going higher. They have to go higher for all the reasons that we know as metals people. If rates go higher, then you debase your currency, then you inflate away your debt. You just don't want to alert people, the frogs in the pot concept, which I kind of brings us. So I don't know. I don't have prices or numbers or levels there, but that's what's going on. What's going on in England is going on in the US, is going on in the Netherlands, is going on in Japan, and how central banks handle it are different ways. Maybe the Dutch central bank is the only one looking at revaluing gold. Maybe Europeans are looking at, I don't know, invading Russia. I don't know, whatever the solutions will vary, but the problem is the same. England, what did the UK do? I mean, it's hard to say what the UK did. It's like Truss came in and tried to be Thatcher light, and the market said, no way. Japan have a broken term structure on their bond yield curve. It makes no sense, and yet it continues to exist. So we, as metals people, going, how long can this go on? Dude, look at Japan. How can that continue to go on? If they can keep a lid on that nightmare, then you can't be impatient with gold. It's going to go up. Silver, it's going to go up, just not on your schedule. And that may seem like a cop-out comment. What it means is whatever your net worth that you can put into precious metals, put it into it, and just don't look at it. I trade precious metals as well, short, long, sideways, long volatility, short volatility, because I know the market. But as an owner, you don't care. You put 5 or your house is your piggy bank, but you don't live that way, So, I mean, what's going on in Japan? I mean, and we touched on this as well. It's like, it's beyond my pay grade. But as a trader, I would make money off of that if they let me, but they won't. So the markets can remain irrational longer than you can be solvent. I mean, eventually the backstop for these markets, governments will break. And when they break, what are they going to do? They're going to restructure, and it'll be broken, and the burden will be on the citizen, the taxpayer. So the gilt problem is the Bank of Japan problem. It is the European problem. It is the U.S. problem. The U.S. is just not going to have a bad time of it. We have the time. We have the time to implement a gold bond 5 years from now that matures 30 years from now. That's it. So, I mean, what do you think about the gilt thing? I mean, is it problem solved? How do you trade it? Do you trade it?
Well, I mean, it seems like they were able to unwind a bit of it, certainly because you had the spike going up so fast and everything was so levered. So stepping in for a little while seemed to save the system for the time being. Yet I just wonder, with all the central banks raising interest rates and faced with the inflation pressures, that, like you said, it seems like it would be popping up somewhere, because
what would rates be everywhere else if the Bank of Japan let rates go where they should be? That's the question I'm asking myself, because I have a feeling that Japan, whatever they're doing, they're being somehow helped or financed by the US. I have no idea how it works. But if their rates went where they should be, then I think everyone else's rates would be a lot higher. I mean, people are selling Japan bonds and buying it. All these trades. I mean, isn't what happened in Europe a function of Japan? I mean, aren't they related? Like Credit Suisse, right? Credit Suisse, the UK. I mean, all these. I mean, the Bank of Japan's a publicly traded bank, and it's like trading zero. You know, all the banks are. Anyway, I feel like Japan's the linchpin right now. I mean, I wouldn't know how to trade it, but if Japan capitulates, you know, we're doomed. Which means gold goes up.
Yeah, and you see them keep intervening, and then that exchange rate just keeps going up and up with their, you know, and it's inverted, so their yen losing more and more value. And I go back to thinking that they're maybe not call it efficient market hypothesis, but there is some sort of true fair value, whether we may know exactly what that is yet. When you try and push that some way artificially, similar with the interest rates, where there's an interest rate where the market brings together buyers and sellers. If you stuff that down, you can do that, but then it creates some inertia in the opposite direction. And I think we're seeing that now. And like you've pointed out over the last bit of the call, where the governments and central banks, they don't like it when it goes back to that part, or to that value, and they try and keep stuffing it down again and again, which is perhaps how you end up with over a quadrillion of derivatives and the debt loads that we see around the globe. So someday there's going to be the bill to pay for that. Like you said, it can go on for a bit longer, yet I think that's why a lot of us turn to gold and silver. And like you pointed out, if you can not have a timeline on that, certainly that helps. It also requires, do you have the confidence that you see that ultimately coming in handy at some point, which certainly can be tough to watch on a day-to-day basis. But to me, it goes back to just seeing the different beach ball being stuffed underwater in different asset classes, and whichever day that shoots back up, seeing how it plays out.
That's right. I mean, and when it's all started, it was like the meme stocks were just like popping on short squeeze. You're like, well, that's nothing to do with silver or gold or bonds. But little by little, every asset class is having a ridiculous. Then it was the base metals, nickel, boom, molybdenum, and now it's bonds. Like every asset class is getting it's like a whack-a-mole thing, right? The beach ball, right? So your beach ball is a better analogy, because it's like a series of beach balls that they're just trying to keep under, and it pops up and then it settles down, and then they slowly push it down again and hope that no one noticed, and that's what's going on. Your comment about Japan, I mean, that's right. The yield goes up, they intervene and squash it, and the next day it's back up again. So if they're going to keep, this is why if they're going to keep doing it, why are they keeping doing it? Well, they're keeping doing it either because they're idiots, because they're scared, or because they're going to keep doing it on a chronic basis and methodically hope that people just go away. Like they want us to just go away. Don't look at it anymore. We're going to manipulate the shit out of it, and we don't care what you think. It's, I don't know. We're a minority. We not many people think like us, and so that's why we are ahead of the curve. And that's not even a compliment. We're too far ahead of the curve. But I'm not complaining about it.
Well, I like to think so. I hope that's the case. Certainly been an interesting decade watching gold and silver and waiting for some of these things to unfold. And, it's kind of an interesting experience because at the same time, it's not like you want to see chaos in the world, yet there's that degree to which you look at the things that are happening and you do see it. And certainly a character building experience and an exercise in patience, but fortunately, I guess the positive of that is that it's brought me in touch with people like you who appreciate you coming on the show, sharing your incredible body of knowledge and all the things that you're studying there. And perhaps just before we wrap up, you could give out the address where people can find you online, where you write about these things every day and provide some great market analysis, which I've certainly enjoyed reading over these past couple months.
Thank you very much. I appreciate that. It's goldfix.substack.com or VBL Goldfix, but it's out there. I'll give you the link if you want to throw it up with the post as well. But you can sign up and you'll probably get a lot out of it, even on the the free version. But we'll take care of you if you come on board. Yeah, so thank you. I appreciate it, and I look forward to Silverfest. You know, silver was the first thing that I traded, and it's my personal trading baby. So it'll be fun to hear other people's. You have me partner with Bob, right?
Yep, you're going to be together with Bob, and that's Silverfest coming up Saturday, November 12th, and we're quite excited to have you there again, digging into SLV shorts and COMEX backwardation, but obviously other topics we'll be able to touch on, and it'd be great to have you there with Bob. I know you guys have done a couple Twitter Spaces calls together, but
we have. If I can make a comment about Bob, he's from the industrial, the physical side of the business. So, you know, precious metals buying and selling, and he knows his knowledge, his body of knowledge is deep, and it's broad, but his knowledge, we have similar knowledge bases, but his comes from dealing in the metal every day. Mine comes from dealing in derivatives and having to learn about the metal to get better at it. And so he will express things in a quantitative, financial, it must be his background, financial analyst, almost like a scientific way. So he'll say, you know, well, this is that and that, very, very empirical, and he'll show evidence that way. Whereas I can be empirical as well, but compared to him, he sees the data more black and white because he can see it. I'm always guessing, but I can add color to his stuff. So I think when we talk, like when he talks about the cost of spot versus futures, I'm going to tell you how that manifests in the market, backwardation, something like that. So the SLV thing is pretty complicated, and that might be one of the reasons that the metal's doing what it's doing. Somebody's robbing Peter to pay Paul, and I don't know how it ends, but hopefully we can talk about that then. I look forward to it.
Well, I'm looking forward to it as well. And for everyone watching at home, hopefully you'll join us there. You can ask questions. There's a live chat during that. And Vince, maybe we'll get you in one of the virtual booths as well so people can meet you. We have some booths where people are able to interact, make some new silver friends. So yeah, be nice to have you in there. And again, that's Saturday, November 12th. Link to sign up in the description field below, as well as the link to get access to goldfixsubstack.com. And with that said, Vince, I sure appreciate you joining me again in these interesting times that we're living through. But great stuff you shared as always, and we'll look forward to doing this again on Saturday.
Yeah. Thanks. Always great to be here, and I really appreciate the conversations that we have. Thank you.